What's up, guys? Mike Sancho here, and today I'm going to be teaching you about expert advisor assisted trading and how you can get optimal results, running your EA. But first, I do know that there's going to be a lot of people watching this video who are brand new to Forex, brand new to trading, and I want to make some things clear for you. That way, again, you guys have a proper expectation when you begin trading in the financial markets using expert advisors. So, first things first, if you guys aren't familiar with what Forex is, it's the currency markets, right? You have world currencies, they fluctuate in value, and we buy and sell these currencies at different prices in order to make a profit. But one thing that you need to understand when you enter these markets is that these markets are inherently risky, right? So the Forex markets are financial markets. This is where the top players in the world get together and do their trading. And it is the largest financial market in the world. So you want to be careful when you get into the market, right? Because it's very volatile. You want to have the crawl, walk, run, fly mentality for sure. And you want to be careful. That way you don't get burned because, there's some really crazy statistics out there, especially in terms of manual trading, where 95% of people are losing money. And that's definitely true because I've been learning how to trade for several years myself, and I've seen a lot of people as well on the same path. And not only have I experienced losing a lot of money in the beginning of my trading career, but I've seen it happen for a lot of other people. So I really wish that I had good quality expert advisors that I could take advantage of when I first started trading, because that would have helped me save a ton of money and learn a lot of valuable lessons. But when you do have, expert advisor trading versus manual trading, you want to understand that there are different strategies involved in the two, right? When you're manual trading, you're looking for something else. And then when you're using an expert advisor, right, it takes a systematic approach to the markets, and it's designed to just pluck, profits out of the market. So it's a completely different thing. And, one thing you want to keep in mind as you guys venture into the Forex world and Forex community is that you want to separate your emotions from the charts. And that's why these expert advisors are so good, because they have no emotion, right? It's just all algorithms and computers, right, who are taking the trades. So there's no emotions involved. When you're manually trading, you frequently have emotions of fear and greed, right? Because your money is going up and down, right? So it elicits an emotional response. It's very different than keeping your money in a bank account, right? Where you can go onto your app or whatever, your banking app, you can check your balance at any time. And unless you've bought anything, right, your balance is going to be at the same level, right? You're not going to open it up and there's going to be less money, open it up, there'll be more money. So a lot of times when people hold a negative balance, or what is commonly referred to as drawdown, it makes them uncomfortable, right? Because it elicits that emotional response. They feel like they're losing that money, even though those trades are open and not closed out yet, right? So it's not an actual loss. It's not a realized loss. It's an unrealized loss. It's just in floating drawdown, because drawdown is very common in trading since the market moves in waves, right? It's not like you get into a trade and it always goes your way. You always go right into profit or right into, loss. The market moves up and down. So you need to get comfortable watching your equity fluctuate. And that's another reason why the demo period is so important, especially with our company. We have the 10-day mandatory demo period. It's very, very important for you guys to learn from that and then watch your account, monitor your account, understand that your account is going to swing. But what you're mainly looking for is those monthly returns, those long-term returns. How much percent am I up at the end of the month? You're not looking for every single day, how much did I make or how much did I lose? You don't do that every single day, because just like the market fluctuates, your account is going to fluctuate. So you may, make $50 and then, lose $20. You may make $100 and then lose $30, then make another $50. So your equity is going to commonly go up and down, and then you're always, or not always, but a lot of the time you will be holding a negative drawdown, negative floating balance, waiting for trades to go into profit and close them out. So this is something that you really want to have a deep understanding of as you get into trading, and even using expert advisors. A lot of people have this misconception that, you know, these softwares are magic or that they're unicorns, where all you do is just turn it on and then it just starts spitting out trade after trade after trade after trade, win after win after win. There's no negative balance. There's no drawdown. Their account just goes straight up, 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 like that. People have that expectation, and it's the wrong expectation. So then when they start trading with the software, and then they start seeing what's actually happening with the account, but they're not understanding that's normal behavior because they're new to financial markets, they're new to trading, it elicits that emotional response, or they think that the software is not performing. They think the software is no good because it's holding this negative balance. They say, well, it's down, you know, $200 and it's only closed out $50. You know, I'm down $150 right now. And they're thinking that's bad, but really that's how your account grows. It needs to leverage the capital it currently has in order to, you know, make gains in the markets, right? You have to put money on the table, right? So that's why you trade with risk capital. This isn't your life savings. This is money that you can afford to lose. But if you are smart about it and you do, you know, what I'm saying, you take, you know, your time, you take it slow, you start on a demo account, you learn the settings of the software, you learn how it works, you learn what's going to happen in different events and situations, what's going to happen when economic news goes off with my software, right? But, excuse me, overall, guys, you know, I just want you to understand, like, the software is not a unicorn. It's not magic. It's not going to win all the time. This is Forex. The software absolutely can lose, but what it's going to do is flip that statistic of 95 people losing money in the markets to, you know, maybe 95% of people winning and 5% of people losing because they're not understanding the settings or they're over leveraging their software, right? Because if you over leverage the software, just as you would in manual trading, you are going to blow your account. You need to be risk conscious, and that's what you are when you're trading. You are a risk manager. You want to manage your risk because you want to be here for the long term. The way to make big money in Forex is through capital preservation. You need to hold on to your money, and you need to steadily grow it over time. The problem is so many people are looking for that quick buck, that instant gratification, that dopamine high, that rush. They want the cash now. They have that greed emotion take over them. Like I talked about earlier, you have the greed or you have the fear emotion take over you. That's why so many people fail in trading, is because they let their emotions rule their decisions. In order to be a profitable manual trader, you need to have a strict set of rules and discipline, and you need to just stick to it and do that. But that's so hard for people to do because money is involved, and money commonly brings out an emotional response. So you guys want to be very intuitive of that, and you're going to learn as you go. But let me tell you, like, if you figure this stuff out, this is going to be so beneficial to you and your life, and you're going to be able to think like the 1%, think like the wealthy, and compound your money over time. That's how you create true sustainable wealth, and that's how you elevate your life throughout the years, right? The time is going to pass anyways, guys, and a lot of people watching this, video right now, they probably have a lot of years ahead of them. So just take it slow, guys. Take your time. I'd rather get rich for sure and do it slower than just try to get rich quick and, lose it all. So you don't want to have the gambler mindset, right? We're in it for the long term. So I'm going to share my screen and start to go over some more things with you guys and teach you about the softwares and the best way you can, have these things perform. So let's check this out. We are on TradingView right here. Don't do that. Okay. Right. So I want to talk about the settings, guys, and I want to talk this software. So I have this chart pulled up. That way I can, show you guys better an example. So you can see, you're going to get a better understanding when I show you this on the charts. If you guys are brand new to trading, right, this is Euro USD. So this is the Euro versus the US dollar. The exchange rate is $1.12. So that means every $1.12 of US dollars is equal to 1 euro, okay? And this is a 4-hour chart, which means each one of these candlesticks is 4 hours of price data. So you can see where price started at the beginning of the 4 hours, and then where it closed, and then the wicks show, how far did price extend during that time frame. But I want to talk about the settings with the softwares, guys. The first setting I'd like to talk about is going to be the weekly goal setting. I think that's an amazing setting, and I'm talking about TradeRinger. By the way, if you guys are watching this video, because you may watch this video at any point in time, so I don't know which softwares you're going to be using at the time of you watching this video, but at the current time of this video, the software we are all running and testing is the TradeRinger. So one of the settings that it currently has with version 2 is the weekly goal setting. That's a very, very, very important setting because we run our software from Sunday to Wednesday, right? And, a lot of times I've seen people hitting, big weekly goals and, by Tuesday or Wednesday, but that greed emotion takes over. And of course they want more out of the markets and they stay in their positions, or they keep the software running and then, they lose it or they give it all back. So that's why it's important, guys. You want to take your profits and get out of the market. You're never going to go broke taking profits. So if you already hit a weekly goal by Monday or Tuesday, you should be turning off your software and out of the market for the rest of the week. You've got your goal, right? We want to set small obtainable goals, stepping stones that are going to lead us to our massive goals over time, right? You have to sacrifice the instant gratification mindset, the microwave mentality, right? That's what our society is all about. We're all about instant gratification, efficiency. How can I get this done the fastest and the easiest way? But you're just going to have to sacrifice that mentality when it comes to trading, because it doesn't work that way. You have to be safe. You have to be careful. You got to move slow over time. It's like the tortoise and the hare, guys. Excuse me, I'm losing my voice. It's like the tortoise and the hare, right? The turtle wins the race because he just keeps going slow and steady and he compounds, right? It's all about compounding. So for weekly goal settings, the settings that I use on my account is anywhere between 3 and 5%. And you guys may, look at that and think, wow, that's not that much, but really it is, because your money, like I said, it compounds every single week, right? So if you were to do 5% a week, it's 5%, 5%, 5%, 5%, 5%, 5%. It continues compounding. Every single week, you're making more than the previous week until, maybe you have a big account. Maybe you have $50,000, $100,000 in an account. I bet you wouldn't be too sad about 5% a week on a $100,000 account, would you? $5,000 a week. But the problem is people don't look at percentages. They look at dollars, right? Traders think in terms of percentages, not dollars. So stop looking at things in dollars and start looking at things in percentages, right? Because people will say, oh, well, if it's 5% on $1,000 account, all I made was $50, right? And they're thinking in terms of the dollar amount. They're not thinking in terms of the percentage, because if that same percentage was achieved with a larger account, no more work, no more complicated, the same market moves, the same trades, just more leverage, right? You'd get that same result. You'd get the 5%. Like I said, on a $100,000 account, it's $5,000, and 5,000 is a lot more than 50. So the problem is, again, people get greedy. They want more than the $50. They're saying, well, my monthly fee is this, and I have to break even my first month, and I have to, pay for this, or I need to withdraw this money. And you guys, that's your mentality coming into this. You're just looking at it the wrong way. Most businesses, it takes 3 years for them to break even, and you're starting something new with a small amount of capital, right? Typically, you would need a large amount of capital to play, these kind of games, right? There's people with multi-million-dollar accounts in these markets, $100,000 accounts in these markets. These EAs were originally designed for these large accounts, these hedge fund accounts, these high net worth accounts, but they've been made, available and more accessible to average retail investors now that we've dropped the barrier all the way down to, much, much smaller accounts. So people have to understand, you have to start somewhere. If that's all you have is $1,000 or something small, you have to realize that you're just going to have to take it slow and you're just going to have to grow. Now, if you're able to deposit more money into your account every month, you're going to speed up the rate of compounding. But it's really important to understand that the conservative goal is going to be the best, because if your weekly goal is 20%, you want to make that every single week. I mean, you guys can go find a compound calculator on the internet, put in like $1,000, 20% a week, and do that for an entire year. By the end of the year, it'd probably be something like $20 million, because that's just an insane rate of compounding. It's just unrealistic goals. It doesn't make any sense. So you talk to a wealthy person and tell them that they can make 3 to 5% a week. They're like, that's insane. I mean, 3%, even 2% to compound your account at 8% a month, very safely is amazing. 8% a month over a couple of years is going to do a lot for you guys. Like I said, time's going to pass regardless. So, might as well keep your money, hold on to your money. Don't have a gambler mindset. Another setting I want to talk about is the equity protector, guys. So the equity protector, what it does is if your account takes on, a certain percentage of floating drawdown, those open negative positions I talked about, and I'm going to show you why that happens on the charts here in just a minute. If your account takes on, like if you have your equity protector at 20% and you're 20% in drawdown, what's going to happen is the software is going to close all those trades and take the loss for you, right? Now, if you're looking at the way these softwares were designed to trade, it's important to understand the equity protector feature and how it's going to affect your trading. Now, if you were running, for example, a $1,000 account and you're running 2 rings on the software, that's 6 different pairs, right? So let's just look at the numbers here, because this is a little thing I wrote up for you guys to let you know how the leverage translates into dollar amounts. So if you're using a 0.01 lot size per $1,000, the opening trades, when they open a 0.01, as price moves, it's going to be 0.10, or it's going to be 10 cents per pip. But we know that this software is going to cost average. We know that it's going to raise the equity. And what do I mean by that, guys? I'm going to show you. So let's say we're watching these charts right here. Let's say it's Sunday right here, for the sake of example, and we're going to turn our software on right here, right? So our software is going to jump into its first trade. Say price starts falling. It's going to place a sell right there. And it's going to place a sell with a 0.01 lot size. So I'll just write it out for you guys. Okay, 0.01 right here. And then what's going to happen is price is going to drop some more, okay? It's going to drop, let's say here, and then it's going to take a bigger lot size. This is called cost averaging. Now, the point of this cost averaging is because the further the market goes, right, the more likely it is to reverse, because the market flows in waves. So the strategies behind the softwares is to take counter trend trades, and as price goes further and further and further, it takes progressively larger lot sizes. That way, when price reverses, it goes in the direction we want it to go with the bigger lot sizes, and it's negative with the smaller lot sizes. So, for example, if it started to sell right here and then it sold again here, the take profit you would see come up would be about here, and it would close out with a small amount of profit. So as it continues to fall, right, it would place more and more trades, 0.05, and then we'll say maybe it places one more. We'll do like this. It would probably place maybe like that. And then maybe it catches one right at the bottom here, a nice one, 0.12. So now what's going to happen is you have all this leverage on the trade. So let's look at the total leverage we have now. We have 0.01 plus 0.03 plus 0.05 plus 0.08 plus 0.12. So that's 0.258. So this is almost 0.3. It's 0.29. So what this means is every pip that price moves now is now $29 per pip. So you can imagine if you're on a $1,000 account and you're running 2 rings with 6 pairs that are all cost averaging, you're going to see how it can start to stack up and become and add more and more risk. That's why, you know, a lot of my team members, they run 1 ring for 1,000, but you know, you want to be careful as more and more leverage pops up. But what happens is, right, price comes all the way down, and then it'll set, you know, like a take profit. It might set a take profit like right here. And I'll put that green. So as price comes up now, it hits your take profit, okay? So that's how the software works. When you're manually trading, right, you're looking to, you know, trade with the trend. When price is going up, you're looking to be in buys. When price is going down, you're looking to be in sells. And you're looking to be in a buy, you're looking to be in a sell, right? So when people see the software, right, going one way, they see price moving down, and it's just taking a buy. Was I saying sells the whole time here, guys? If I was saying sells, these are supposed to be buys, right? Software is going down, it would be buying, right? It takes counter trend trades. So people wonder why, if they're brand new to trading, right, they wonder why price is going down and the software is buying. They think, what the heck? This thing sucks, right? But remember, I told you guys, what it does is it takes out the emotion factor. There's no emotion, and the software is able to systematically collect profits, you know, as it goes. And if we look back, right, let's see what would happen. You guys see how the market moves in waves, right? So it would be going down. The software would be buying. It'd come back up. It would hit the take profits, cash out all the profits, and then it would go down and be buying, or it'd be selling, buying, selling. But you can see each time, right, it comes back and it cashes out the profits. So that's what you guys need to really understand, and understand where the drawdown comes from and why you're going to end up in drawdown, because this is how the software is designed to trade. So when price is moving like this and it's not making any, you know, crazy wild moves, it's great. But then, you know, there are times when, you know, price takes a big move. Like if I measure out one of these moves, like this is a pretty good move without a pullback. So you can see, excuse me, you can see how far this thing went in total. It went down like 250 pips. So what happens is you guys are getting into buys the whole way down, and it's upping the lot size, right? With this increasing leverage, it's putting you into more drawdown, and you think, you know, the software is horrible, but then it comes back and then everybody wins. So, you know, when you're trading, you want to be, you know, cognizant of how it works. And when you're in the markets, right, and let's say you're approaching Wednesday or something like that, you know, a lot of people, they freak out if it's Wednesday and they're in drawdown. But usually what's happened is, you know, a move like this has happened, a news event, something like that might have caused it. And then, you know, they come down and they're in drawdown, and they're thinking, you know, I'm going to have to close these trades. I'm going to have to do this. What I do if I'm in drawdown, guys, I pay attention to, you know, what's happening. And you can easily check this yourselves. You guys can see, you know, if a pair has gone 150 pips, 200 pips without any sort of pullback, it's going to snap back, because you can see the market never just goes up and then just never comes back. It always moves in waves, and it does this on every single time frame, guys. I can pull up the hour chart, I can pull up the 15-minute chart, whatever chart I pull up, right? Price moves in waves everywhere. So, you know, it's important to understand that, and you want to evaluate your situation, right? And like I said, you want to think in terms of percentages. A lot of people, they'll be in drawdown. They say, oh my God, I'm down like $200. I'm $200 drawdown. I say like, what's your account size? And they'll say like 5,000. So if you look at percentages wise, that's, what is that, like 4% something? Yeah, I think 4% drawdown. So you want to look at percentages. It's really common to have like 15, 20% drawdown, when using these softwares. But like I said, the only thing you're looking at is what's going on monthly. Where am I going month after month after month? Because you're gonna, lose trades. You're gonna end up in drawdown or news events, or your account may dip and it's gonna go up, and it's gonna dip and it's gonna go up. But that's the roller coaster ride of trading. That's why so many people just aren't cut out for it manually, and that's okay. Trading is not for everybody. That's one thing I've realized in being a trader, that it's not for everybody. Not everybody wants to take that emotional roller coaster and, battle their emotions and master that. But that's why these softwares are so incredible, because they're designed to do this stuff for you, and they give you a competitive edge in the markets if you let it do its job. So many times we get in the way of it working, and we mess it up ourselves, or we have the wrong mindset about it, and it is giving us anxiety and stuff like that. And like I said earlier, guys, if you're trading with live capital, it should be risk capital. This means it's money that you're okay to lose, so you shouldn't be emotionally attached to it. So if you go into 30% drawdown and then you pull out the chart and you see, oh yeah, it's dropped 250 pips and it hasn't pulled back yet, price is getting ready to snap back and cash out all the profits, so you wouldn't be stressing over it. But it's really important to always evaluate your situation, and you're going to want to learn, I'd say at least the basics behind Forex, and start looking at the charts, start watching it trade, watch how it collects the profits. Because when it goes up like 50 pips and then down 70 pips, up 100 pips, down 50 pips, like that's back to back to back to back to back profit grabbing with low drawdown. But people get worried when price just makes these wild spikes, because you do experience the drawdown. I just want to prepare you guys to experience that. It's gonna happen. You're gonna experience drawdown, and it may make you feel uncomfortable at first until you realize that this is the way the softwares are designed to work. This is the way that it profits. So you have to let it do its job. But in terms of coming up on Wednesday, what I do myself if I'm in drawdown, number one, I'll always turn off the auto trading on Wednesday on the MetaTrader, and then I'll evaluate my positions. If there's any trades that are close to break even or in profit, I would go ahead and close them out. And then if I'm in drawdown, a good bit, I can, look at the chart, see, okay, when's it going to reverse? Is it going to reverse? And if it's going to reverse, then, just don't close them out. The take profits are already going to be set. So it's going to go back and hit. And guys, this isn't financial advice, but this is just advice for you to take control of your own software and get educated on the products that you're using, on the software you're using. Because like I said, if you figure out how these things work and you master it and you're able to set the proper, risk management to it and let it grow over time, you guys are going to be so happy. You're going to build true wealth. So, that's why I thought it was important to go ahead and make this video, take this time out of my day so I can, help people understand, because I want to see people, win in these markets, but so many people get in their own way just because they're not understanding or cognizant of how the softwares work, or how trading works, or how the markets work. So, they really, kind of talk themselves out of opportunity. And this is why a lot of people end up in their, circumstances, or they're never able to get out of, the paycheck to paycheck cycle or anything like that, because they're constantly looking for that, like I said, that quick gratification. So, someone who's brand new to trading, they may come in on our trial and test it for, a week. And, at the end of the week, it's in $200 drawdown, and they're like, this thing sucks. I quit. And then, they never look at their account again. and then the next week it comes back out of the drawdown and they're up 15%, and they just don't understand. They don't realize, and they don't look at the numbers and the percentages and how it works in your favor over time. You guys need to get educated on money and how it works. But yeah, another setting that I want to talk about, guys, is the range setting. I think the default on there is 21. A lot of my people are using it at 30 because it separates the distance between trades. So instead of having, tight cost average trades together, what it does, it creates a larger gap. So it gets you in less trades. So like if there's a big move, it's going to get you into less trades, which means less drawdown, which means less risk. So more conservative. And then you also have the max levels setting. And that's the number of trades it will take on a pair before it closes you out and puts you away. And that's going to be, the average is 12. So it'll take like 12 cost average trades before it'll just stop taking more and more trades. It'll just wait for a price to come back and hit the take profit. So it'll stop, taking those trades. But yeah, guys, I think I'm just looking at my notes. I wrote down some stuff for this video because I wanted to make sure that, I didn't leave anything out. But yeah, I mean, really, with the softwares, and if you're watching my video and you're using the Trade Ringer with Economy, I mean, this is one of the most advanced softwares I've ever seen, but it just requires a little bit of patience to understand how it works and understand how it can work in your favor. And I just really encourage people to start adopting the long-term mindset and not thinking about the short-term gratification and the 4-week ROIs and the 8-week ROIs. And also, I encourage you guys to continue, learning the settings. Be on demo as long as you need to, until you understand, how this works when the market fluctuates, how it goes into drawdown, goes into profits, goes into drawdown, goes into profits, because it's a cycle. Because I get so many questions, people come to me, they say, what am I doing wrong? What am I doing wrong? What am I doing wrong? This person hit their 5% weekly goal by Monday and they're out. This person hit their 10% weekly goal by Tuesday and they're out. It's Wednesday. I'm in, 7% drawdown. I'm in 15% drawdown. What did I do wrong? What's wrong with my software? Why isn't it working? It's just because, don't understand, don't have the proper expectation. Because when you understand this, you understand how the software works, how it takes the counter trend trades and then collects profits every time it switches directions, then you would know, right? You would say, oh, okay. Drawdown, I mean, at the end of the day, drawdown means profits because the software is designed to go into drawdown. It's designed to go into loss. So as you go into drawdown, that means profits are coming because when price goes back the other way, right, it's going to cash them out. And another thing I want to talk about too, guys, is also consolidation in the markets. Sometimes you experience flat markets where they go sideways, maybe something like this, or they're, for a day or who knows, but like, sometimes the markets are going to move sideways. We make money in a ranging market when the market's moving. So when price is going sideways and it's going up and down a little bit, people will look at their software and say it's not making money. They might look at the week and say, I only made $30 this week, on a, however much account. They're like, this is nothing. Like, this isn't going to pay my monthly bill. This isn't going to grow. This is stupid. This is worthless. It doesn't make enough money. And then next week the markets are moving and it makes them $350. So again, like, this is just about adopting the right mindset for trading. Every single day is going to be different. Every single week is going to be different. It's not going to be Monday, Sunday, Monday, Tuesday, Wednesday, I make $30, $30, $30, $30. Like, I make the same thing every single day. It gets in its trades and it gets out. It gets in its trades and it gets out. It's not like that, guys. It's not a perfect world. I'd love for it to be like that. It'd make it a lot easier on people and their emotions, but it's just not like that. It's going to be, I make 3% Sunday. I lose 2% Monday. I go into drawdown 5% Tuesday. I'm up 1% Wednesday. Next week, I'm up 7% by Tuesday. I hit my weekly goal. Next week, I go into drawdown right away. I go into 15% drawdown, 20% drawdown. I get caught in a news event. It starts to come back. Wednesday, and then, I close out break even, right? I close out my trades break even for the week, no win. And then the next week, again, I hit my 7% weekly goal by maybe Monday, maybe it goes in your favor. That's how it works. But again, you're looking at the long term. You're looking at the monthly percentage. How much am I making monthly? 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 The only time you should be thinking weekly percentages is with your weekly goal setting. That's it. Other than that, don't look at daily ROIs. Don't even think about the weekly ROIs, because it really doesn't matter, because you're going to have weeks where you win, and there could be weeks where you lose. It's Forex, like I told you, right? You're going to have to take losses in this game. Not every trade can be a win, so you need to understand that you have to take loss. When you understand and accept that there's going to be loss, you're not going to be surprised or angry or disappointed when it happens. So it's about crafting the proper mindset around this, adopting the mindset of the 1%, the wealthy. This is how they think. They understand this stuff. They take the time to educate themselves on it and use it to their advantage. They don't make conclusions after a week of using something, 2 weeks of using something. They don't jump to conclusions, wild conclusions, and say that this isn't going to work, right? Because so many people get in their own way of their success. But that's pretty much it for me, guys. I think I got my main message out. I didn't want to make this video too long, because I want people to watch it from start to finish, but also want to, make sure I dropped as much, knowledge as I can. And I'm still testing these softwares a lot. So you want to be sure to, learn how to use them, educate yourselves on the settings. There's going to be more videos coming out, more education, learn the basics of Forex, right? Pay attention to what's going on around you and figure out how you can use this to advantage. And if you guys are an affiliate with this business or thinking of being an affiliate, this is the easiest business you could possibly show them. But again, you just want to make sure that they get educated and have the proper expectations. And if you're one of the people who is super worried about making their monthly bill, their first month or their second month, guys, all you have to do is refer 3 people and you get it for free, 3 people. And then if you guys are smart or want to take advantage of the affiliate plan, 12 people adds an extra $600 a month in your pocket, not even including any of the bonuses, right? Those coded bonuses are amazing. It puts a lot of upfront, cash in your pocket, which you can now use to fund your trading accounts. Like I said, speed up the rate of compounding. If you're smart, you're going to go ahead, you're going to go out, you're going to take our training with Market Hackers, you're going to share this opportunity, right? And anyone with half a brain who understands that growing their money is a good idea is going to want to join this company. And then, you take those residuals and you reinvest them back into your softwares. You reinvest them into other businesses, into other assets that you're going to learn about in the Seed program, in the Seed University, learning how to build, grow, and sustain wealth in different industries. So we're here to take you guys to the next level, honestly. You're going to learn how to create your own economy. So thank you guys for watching, and I'm going to end it here. Hit me up if you guys have any questions.